Let's step back for just a moment and talk about this past weekend's newsletter. I did a quite extensive analysis talking about the upgrading of the buy signal because our weekly buy signals are now in. And these buy and sell signals, they take a while because it's a weekly basis to mature. So it takes time for these things to actually come across. So actually last week, actually 2 weeks ago, the signal actually got very close to registering. And over the last couple of weeks, it's actually come into a full status. And so we need to be aware of that. Now, the issue is that by the time these signals occur, the markets have already done a big chunk of their move. And that's okay because we were talking about early on this year, back over here as this market started going up, we talked about adding exposure to the portfolios. And over the last last couple of months, we talked about, at different levels, we added exposure. So we've been building in to our portfolios and moving back towards full target allocations, of course, over the last couple of months. So at this point now, there's not a whole lot to do here. But in this last weekend's newsletter, and actually the last 2 weeks, we said that if the markets could break out above this previous support level, and this level, right here along 2,800 was some pretty serious resistance. And we had talked about the fact that if the market could break above that we would make a potential run back towards old highs. And that's exactly what's occurring. We're not there yet. But that's exactly what's happening right now. We're currently in that process of making this move back towards old highs, and that's very realistic that we think it'll happen in the next couple of weeks. So, but the issue is now we're moving into 2 months of the year that tend to be a little bit more, troublesome for the market. So in August and September tend to be pretty rough months for the markets. Historically, they tend to be weaker in terms of return. So there's a real probability, and I kind of laid this out this past weekend, talking about the fact that there's a real possibility that in the course of the next couple of weeks, that while we've got this advance here back towards the old highs back from January, that we could very well work our way back down here for a retest around 2,800. If we violate that, we're going to see a lower level, probably back around 2,740, 2,750, somewhere around there, before we find support back around some of these other moving averages. So there is a possibility as we move forward over the next couple of weeks that we could see a sell-off in the markets. Again, lots of issues out there right now still that we haven't dealt with. We still have Russia, that whole issue there with what's going on with sanctions. Got sanctions in Iran at this point. Also, we have the whole deal with China, the devaluing of their currency, of course. We've got a massive amount of bond issuance coming due. This is something that could really kind of roil the markets as well. We're about to come up on another continuing resolution for the government. This is going to be an issue that we're going to talk about in late September, early October, as soon as this happens. But the administration is talking about right now waiting until after the election to, try to pass a resolution to fund the government. That resolution is going to be north of $2 trillion, or very close to $2 trillion most likely, to fund the government through the next fiscal year of 2019. That starts October the 1st. The problem is that that's going to require a massive amount of bond issuance at a time where the Federal Reserve is now reducing their bond purchases. They're now pulling back their balance sheet by about $50 billion a month. China has slowed their bond purchases because, they're in the middle of a currency war with the U.S. And other banks around the country, around the world, are also tailoring back some of their purchases. So with the supply coming to deck, and the potential for, less buyers really kind of puts a lot of things at jeopardy for the financial markets. A sharp rise in rates could very well disrupt the markets here very quickly. While the market's been rising here over the last couple of weeks, yields have actually been coming back down. We're about 2.93 today, gotten up to over 3% last week. And again, this divergence between what bonds are telling us and what stocks are telling us are two very different things. Now, tomorrow on the website, go by the website, realinvestmentadvice.com, and I've got an article coming out tomorrow talking about the bond market and what the bond market's telling us as terms of investors, what we should be paying attention to. That's going to be out in the morning, our Technically Speaking update, and so I encourage you to get by the website and either just register there at the website, or if you're already registered, I'll email it to you in the morning. But go by the website, Real Investment Advice, tomorrow, and you'll be able to get that article. Now, the problem here with this advance, as I was saying, even though we've now registered a buy signal and are talking about increasing allocations back to full weightings, the point here is that by the time, as I said, by the time this occurs, typically the markets tend to be overbought. So just because we increase the buy signal does not mean we go jumping into the markets with both feet. It just means that simply that right now a lot of the downside risk has potentially been removed at the moment. Doesn't mean it can't return in very short order, but at the moment it's been removed to some degree, which suggests that this market advance here is a little bit more sustainable going in towards the end of the year. So there's a lot of things that can derail that, but we just have to deal with that when it comes. Right now, we have to honor the bullish trend, and this trend is remaining very bullish right now for the markets. Moving averages are rising. The trend is rising. We've got higher bottoms on the way up, higher highs on the way up. This is all very bullish for stocks in the short term, and so we want to maintain positions, and we certainly want to honor that. However, we want to look for opportunity. If you see this advance going all the way back, and of course you're watching our live stream on either our website at Real Investment Advice or at our live stream, what you'll see here is that even during this advance, there were several points where the markets pulled back, got oversold, and gave you a much better entry opportunity to add exposure to the markets. We're going to probably get that same opportunity in the next couple of weeks. So pay attention here what the market's doing. And again, if we take this market and we look at it on a weekly basis, we can see exactly what we're talking about here. Every time the market has gotten this overbought, there's been a correction in price. We're currently back to levels that historically have led to short-term price corrections and consolidations. So look for an opportunity to add exposure to portfolio. Don't go jumping in with both feet. That typically tends not to work out well. You buy high, you wind up panicking when you buy high and the market corrects. So let the markets give you an opportunity. We've been sitting on a little bit of extra cash. We've talked about that really ever since earlier this year, having a little bit of extra cash, using that opportunistically as this market's gone up, looking for entry opportunities into good areas. Continue to do that. And of course, if you read our weekly newsletter, we go through all the sector analysis on that as well. And in the next week, we'll also be launching our professional version of our website, which actually lists our portfolios specifically about what we're doing on buys and sells, etc. That'll all be at the website, realinvestmentadvice.com. Okay, quick break. We're going to come back, pick up with the markets, your money, your questions. Feel free to give us a call, 281-558-5738. We'll be right back for the Real Investment Hour on the Voice of Texas.
Investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.